Thank you, Jane. After that introduction, I can't really wait to hear myself. DeFi is our subject. As Jane said, I'm Dominic Hobson. I'm one of the co-founders of Future of Finance, which is a sort of club for people who want to transform the financial services industry into something which is socially useful and economically successful and more productive. Now, DeFi, Jane said, what on earth is that? And I found myself asking the same question. Its promise really is open access to all financial products without the gatekeepers we now know as banks, with their rather tiresome credit checks and even more tiresome KYC, AML and CFT onboarding processes. In other words, DeFi, Jane, is the original and ultimate blockchain disintermediation story in financial services. No trusted third party needed. Now, to help us explore that idea, we've got no less than 6 experts, people who know a lot more about this than I do, and in a fairly random order, Rebecca, who is Wave Rebecca, is from Oric, the law firm where she specializes in financial services regulation and enjoys working with fintechs, including providing advice on cryptocurrencies and ICOs. Wasim Ahmed, give us a wave. Wasim is Chief Content Officer, was it?
Crypto Officer.
Crypto Officer. Can't read my own handwriting. At Vault 12, which is a sort of backup solution for private keys. Max Cantelia, who is a very familiar face to many of you, I'm sure, is co-founder of Zilliqa, which aims to speed up relatively slow transaction times on blockchain. Alistair Johnson is founder and CEO at Nuggets Life, which provides a secure digital identity using biometric data. Jonathan, give us a wave, of Dunsmore Law. He is a US securities lawyer focused on blockchain and crypto. Last but not least, on my far right is Gustav Arentoft, who works for MarketDAO, who are, I think, the biggest finance platform provider in this very space. So we've got exactly the right people on our panel, but we hope very much, what I like when I run these panels, want to be interactive, so it would be great if we had some questions from the floor. I'm not averse to you gesticulating wildly with whatever part of your anatomy seems most appropriate to catch my attention, ask a question, but I will stop from time to time as well to solicit questions from the floor, and please don't be shy to ask. This is your chance to talk to the experts in the field. Now, perhaps I could begin, and I'd like Max and Gustav perhaps to address this really. The decentralized finance is certainly not short of ambition. You're aiming, after all, it is aiming, after all, to displace intermediation in virtually every area of financial services. Loans, payments, investments, derivatives, with smart contracts, I suppose. It's looking to get rid of banks, investment banks, central counterparty clearinghouses, central securities depositories, real-time digital, real-time gross payments platforms, all sorts of infrastructure. It's going to get rid of asset managers. Is that a realistic vision? And if it is, on what sort of timescale are we talking?
So first of all, I think this space is of course still quite young. We, in the last year, so basically like Maker, we're the biggest decentralized finance project on Ethereum. And basically, like in the last year, we have seen a lot of newer services being built in this space. We also ourselves launched the full version of our protocol called multi-collateral DAI. And in the last year, like there's been so many products being built and launched, right? So like when you have something which is like still so new and so early in that sense, it's of course difficult to capture like the entire market like from day one. However, though, we saw last year the growth rates. We started out with around $300 million of collateral in the system, and we just hit like the big milestone of having more than $1 billion of collateral in the system. Bear in mind that decentralized finance coined as really like a term was something that really came to be, you know, late 2018 when we saw things such as like Compound being released in Ethereum and so on. So it's still like a relatively new term, but I would believe that if you take something which only is, you know, roughly 2 years old, and we already sit with more than $1 billion in the system, I think that's like a pretty decent start at least. But from the ambition of where we want to go, we're still just, you know, like just on like the uptake. So even though we might feel like we have come a long way, and there's a lot of people looking at us right now, I still believe that this is still like very, very early days, and there's still so much infrastructure being built out around what we're doing.
Max, I mean, I took the trouble, in fact, to look at the DeFi Pulse, where it estimated around $1 billion of crypto is now deposited into DeFi apps. And then I looked at the volume of bank deposits in the UK alone, and it was like £3 trillion. So how do you scale this? How do you realize this ambition? How do you build up scale timescales within our lifetimes?
Yeah, so first of all, I think it's a really unfair comparison to look at how much is
I am a journalist, you know, specialised in lack of justice and unfair comparisons.
I think it's very unfair to quote these comparisons as much as we love to look at data, because what we should be looking at is where this is going to go rather than where it is today. And in my opinion, we've already made huge traction in a very, very short period of time. I think it's very easy to criticize progress in this space when we look at all the hurdles and potential barriers to big adoption. But to answer your question, you know, at Zilliqa, we have created the world's first public blockchain that uses something called sharding to achieve very high throughput.
I was told not to ask about sharding, but it's incredibly complex. Huh?
Yeah, maybe later on this evening.
Yeah.
It's
quite an evocative term, though, isn't it? It's like the shard, the building. You're breaking things into smaller pieces, like you're breaking a piece of glass, right?
Yeah, exactly. It's a divide and conquer technique. Very, very easy in principle, really very difficult to execute in reality. But we built Zilliqa because we wanted to build a highway or infrastructure that would do a number of things that we felt would enable large-scale adoption. So one is, of course, throughput. And so, you know, we have succeeded in enabling thousands of transactions per second on our network. The second is security. And I think for anybody that is looking at DeFi seriously, you will understand that the smart contract layer plays a very, very vital part in enabling any kind of decentralized financial service to work. So we were very brave. We actually built our own smart contract language. And we did that because we feel that other languages have too many vulnerabilities. And so we built a language that actually allows you to formally verify your code before you release it out onto the network. So again, we feel that not just network security, but application level security is extremely important. I mean, look at what happened a couple of weeks ago with BZX. If you haven't heard about this particular issue in the marketplace with something called flash loans, you'll understand why smart contract languages and applications have to be a lot more secure. And finally, of course, if we are going to provide services to the unbanked or the underbanked, then the cost of using a blockchain-based application it's got to be really very efficient and economical. So we've got to get all of those things to work in order for DeFi to go a little bit more mainstream than it is today.
Any member of the audience burning to ask a question yet?
I have a question.
You're not a member of the audience.
I know, but I'm considered a member of the audience. Does anybody here have a digital wallet? If I were to transfer $10,000 to you right now, how many? Raise your hand.
I'll take it.
That's about half of the audience. So how in the hell are we talking about DeFi when only half of the audience has a digital wallet in order to accept $10,000 of Bitcoin? That's how early we are. That's how far we have to come. And granted, it's a couple $1 trillion worth of transactions. JP Morgan's doing about 2.2 trillion on their little quorum. So we've got a long way to go, ladies and gentlemen, but that's what we're in the room for. And that's what you're hopefully learning from all of these people of where we are, where the starting point is. Because there is so much more we need to advance. And if you do not have a wallet by the end of this conference, come see me, and I will show you how to download one and activate one. Not to say that I'm going to give you $10,000.
Is it safe to take advice from a lawyer about opening wallets?
No,
I'm not.
this isn't my jurisdiction, so
I'm not sure.
none of this is legal advice.
But if I can put a comment to that right there, I think like some of the things that we believe in like decentralized finance, which is like what we're doing, right, is that we actually were creating services that like normal people would want, right? So for example, in November, we launched a product called the DAI savings rate, which basically enables you to stake our stablecoin and then receives parts of the profits of the system. So right now, since we launched, went from 0 3 months ago to like having $70 million in it. So around 60% of the DAI we have out there. And this right now, because of the collateral rates and the interest rates in crypto is pretty high, so it pays 8% to people, right? So like, of course, like you can ask like how many people in this room would want Bitcoin if they had to buy it themselves. You know, you need to be like a little bit, risk averse if you want to do that. Right?
But even your rates fluctuate.
Sorry?
Like, even your rates fluctuate depending on the week, right?
Sure.
With DAI, right?
Sure.
And so you can't build
exactly as in traditional finance.
Yes, but the rates fluctuate a lot less than traditional finance. Or excuse me, the DAI fluctuates a lot more than traditional finance.
Yes,
and
yes.
you can't build stable economies on something that fluctuates so wildly. That's one of the reasons nobody has. Well, that's no one.
Who said bullshit? Tell us why it's bullshit.
Yes, but it's a little fluctuation. How much does Bitcoin fluctuate? Well, I understand that, but
How can you separate LIBOR from DAI savings rate?
because the DAI savings rate fluctuates more than the LIBOR.
It's also way higher.
What do you mean, so what? Would you rather take one bullet shot one or multiple bullet shot ones? That is not a ridiculous.
But growth,
Next time, come up.
Growth solves that problem. We haven't got long, so I'd like to move on to the legal issues, and perhaps this is the point to bring you in, Rebecca, and I'm sure you have something to say about this.
Probably,
behavior. So,
I can't help it. Those Americans.
Anyway, this system is effectively promising to operate outside our present legal system. It's going to create these private frameworks of law, if you like. Where would you say the law itself, as it stands today, is in relation to this new possibility? Is it responding to it constructively and positively? Is the law adapting, or are we stuck in a sort of stasis?
So the law at the moment is technology neutral, at least in the UK. So what we're looking at is what is actually going on, and is it a financial service that we would look at traditionally, and if it is, then we start looking at regulation. And one of the big issues when we're looking at kind of DeFi is there needs to be a fiat element, so a kind of traditional currency element to come in before it kind of triggers a lot of the financial services laws. And when you have these DeFi platforms which are purely existing in the crypto sphere and these are not regulated tokens, you're then kind of quite outside it. Now, this is part of it being very young. The law hasn't particularly, it's starting to move towards less of a technology neutral approach, is what I'm seeing in the market at the moment. Some of the AML laws that have come in the UK in particular, as well as some of the other stuff that's going on in where they're looking at regulating. We're seeing that they're regulating tokens and crypto slightly more than we would expect them to regulate the traditional finance products. So it may be that they're moving towards trying to regulate these markets more. But I think it's too young for the regulators to get concerned really at the moment. There's not really a consumer protection issue right now. It's too small. I think as we see it grow, the regulators are going to have to step in, and they're going to want to step in.
Can regulation help, though?
Yeah.
Does open banking, for example, help?
Well, so open banking, we've actually seen less uptake than I think we all expected to see with open banking. But I think what we've seen with clients in the fintech space, kind of prior to the DeFi space, is at the very early stages, they were saying, we don't want regulation, we want to operate outside. we want to kind of exist separately. And then as they grew, they found that investors wanted them to be regulated, kind of people who were trying to use the platforms wanting them to be regulated, and they ended up wanting to be regulated. So I think in terms of building trust and in terms of real adoption by kind of consumers as well as kind of institutions, you're going to want regulation. It's just not clear how that looks, because if we're on a DeFi system and there's no one to blame, who are the regulators going to kind of use as a scapegoat if there is a breach? Who are they going to fine? Who are they going to come after? And they're going to struggle to really want to regulate these areas, or to regulate these areas, if there's no one they can kind of come after. So I think that's going to be a real struggle, and whether smart contracts, I know one of the earlier panels, they talked about regulators using smart contracts and the regulatory system changing. So you have the smart contract monitoring, and I think that may be a solution. But at the moment, I think as it grows, it may be that regulation is a hurdle before it's a help.
Mm-hmm. Yeah. And Jonathan, you agree with that?
Yeah, I mean, I think that, governments are in the business of controlling things, and I don't think that they're going to just hand over that control, especially whether it's $75 million at launch or $1 billion at launch. I think eventually there is going to be some type of regulation, whether it's an identity solution that's verified by your government, or it's, as we were talking about earlier, deeds on the blockchain. Like, all of these things have some sort of centralization, whether it's government centralization from the regulation point of view, or it's decentralization, meaning that it's all on our phones.
Okay. But governments are not in the business right now of frustrating this.
Just my government is, but
okay.
Yeah, I'll second that. There is another side to the regulations. I mean, you're talking about it in terms of controlling markets and those kinds of things. But my company, Vault 12, is based in the US, and it's a decentralized system for backing up private keys. We introduced a token right at the beginning to make sure people could buy that service and have that as a service. So from that perspective, it was pretty straightforward. There was a nice branded token that people could use to purchase services for backup and peace of mind. But in the US, to do that, if you raised money using that mechanism, you're now subject to a whole wide sort of variety of securities law. And recently, the SEC, one of the SEC commissioners, proposed that, well, this isn't really going to work very well if you're trying to build new applications and you want to foster more innovation, more startups. We need to give them a safe harbor. Now, this isn't approved. It's going to go through whatever the process is for the next year or so. But that's a step in the right direction to foster the next generation of apps, whether they're centralized, whether they're decentralized. And that's what we need. Today, all conversations about blockchain invariably end up around speculation, those kinds of things. And I feel like the minute that we start to see applications that ordinary people, ordinary retail consumers are using, that's when people will start to realize the benefits of what blockchain, decentralized finance, what that brings. And decentralized finance is probably the best use case for many types of blockchain application. And so that's when I think it ups the ante for the regulators, it ups the ante for the lawyers who are involved in the smart contracts, which are very difficult to code today. So I'm very glad that you've been working on ways to make that easier. And the benefits of blockchain start to percolate into the ordinary consumer base. So that's just my opinion.
I mean, our experience is we work with the FCA in the sandbox, so I guess what you're working towards. And when you're a new company, as a startup, and you go to a regulator, you think they're going to take you around the corner and beat you up. But actually, the experience has been the exact opposite. They've been very conducive, helping us, support us. And I think that's the only way for things to advance, is to have conversations with the regulators so that you can move it forward and so that you can have access to more everyday people, to your point, because that's where the tipping point is going to go from being the 75 million into the trillions, is when the everyday people have access to it, and regulation is going to come with that. But it needs to have a conversation. Other countries, it's been a little bit more difficult, and it's dependent around the world. But the ones that have adapted to it and have seen it and are working with it seem to be moving a lot quicker and a lot better and applying new regulation to it.
One of the things I don't want to get bogged down in the regulatory discussion yet again. We've had a lot of that this morning. But one of the ways you can build this market, and Max made this point very forcefully, is that actually security, safety, people feeling confident that they're not going to lose the asset, it will really help this market grow. And Wasim, what gives you confidence, for example, that smart contracts can't be hacked? They're bound to contain mistakes, aren't they? And they create a vulnerability. Does your business lie awake worrying about that?
So we're a decentralized platform, and we use smart contracts. And the beauty of a smart contract is it's coded, it's out there on the blockchain, it can be inspected. People can see what transactions are flowing through that smart contract. So there's a lot of visibility and the ability for people to inspect what's going on. We don't have that in today's traditional banking system. So that's beautiful, but what that does is it means that smart contract better be, legally tight, and the coding of it better be absolutely bug-free, and there can't be any holes in it, because once you've put it out there, it's a big deal to kind of delete it and put something else in place of it, because then, people can ask questions about visibility and traceability and all of those kinds of things. Yeah. So smart contracts, beautiful things, but they're still very difficult to build, and there's not that many people out there who know how to build them.
Maybe I can make this a little bit more tangible. So in decentralized finance, so for example, at Maker, we have around $600 million of collateral in our system right now. So that basically means that that's the price on our back, right? If someone cracks the security of our contracts, they can basically go in and potentially scoop up the entire collateral pool. So that's like the immediate security risk of it. Right now, most of the assets in these protocols are cryptographic assets, or cryptocurrencies, which means that if you scoop them out, it's frankly almost impossible to reverse the transaction. We've only seen this happen one time before, which was during the DAO hack a couple of years ago. So I also just quickly want to say here, Ethereum can also be formally verified. Our contracts are fully formally verified. We're one of the most audited projects. We spend an absurd amount of money on having the best auditing companies from both the US, Europe, and Asia, done full formal verification, both internally and externally with teams like this. However, and I also kind of want to go against what you said, smart contracts are difficult to build. I would actually say I think it's too easy to build a smart contract that can hold a lot of value, because if you build a smart contract that serves a purpose in the market, you could potentially launch it without having done any security audits. And if it's something that people, values, that they think is interesting, then they will start depositing funds into it. And this is, when you have something that is completely unaudited, where people who don't necessarily understand the underlying security risks of it, they will start depositing, potentially millions of dollars into it. This is when you have a problem, right? So you also mentioned earlier there was this BCX, which was arguably more an exploit than a hack. We've also seen with a protocol called Curve Finance and Idle.finance recently, where some of these experimental protocols that gives very, very high returns in the range of 40 to 60% per year. And people, they become super excited, wow, there's a lot of money to earn, but there's also a lot of risk associated with it.
But even the Steam takeover by Tron recently, that's possibly a 51% attack.
That's a governance attack.
Yeah, but that's something that also we have to worry about, because there's this, is this auditing firm legitimate? And then there is, what is the superpower that could, potentially hack it? Because with quantum and all these other kind of fun things possibly coming down the line, it's an ever-evolving battle.
Okay, we have, believe it or not, we have 1 minute left. So I'd like to...
We have 10 minutes.
We
have 5 minutes.
We have 5 minutes. It says 50 seconds on there.
I trust that guy.
Okay. You think we've got 5 minutes? Okay, well, that's good. I'm sorry so sorry to have interrupted you. I'm just reading
I don't.
There, yeah?
I trust the man with
Anyway, I'd like to, this will probably take us 5 minutes anyway.
Don't trust technology.
I'd like to read you a statement I heard from a very senior banker at the Cybos banking conference in September last year. He said, I think the reason blockchain failed in our space is because that concept of not having a trusted third party just doesn't work in the business we're in. People entrust their precious pensions and their investments into these infrastructures. They want to understand where they are, they want to point to somewhere where they belong, and above all, they want somebody who's going to be liable if they get lost. how do you counter, and he may well represent not just his institution, but a lot of his customers as well. A lot of institutional investors I talk to, for example, are very focused on, they want more friction in the system, not less. They want more intermediation. They look to these people as insurance policies. Now, Rebecca, you're nodding. Why don't you react first to that statement? How do you overcome that institutional lethargy, that inertia, if you like?
Yeah, to be honest, I don't know if in today's climate we can really. I mean, people may be willing to put a small percentage of their portfolio or savings into these systems, but I would find it difficult for most people to envisage buying their house, one of probably the biggest expenses they're going to have, through somewhere where if something goes wrong, there is nobody to blame. So, you know, where I think probably the big step is going to be is going, who do we blame, and who do the regulators blame? Who do the insurance companies blame? Who do we blame? And it may be this is where insurance companies can step in and they can say, it doesn't matter who we blame, if you pay us a premium, we'll pay out. Maybe a solution to that. But I think for everyday people, I mean, how many people like lose passwords? If that was it, if you lost your password and that was like, you cannot ever access that money, you know, that would be, I think, a concern for a lot of people. So then probably, at least in today's climate, I can't see how we would maybe move out. But maybe you guys know and you can see it.
Thanks for that segue. That's exactly what we're there for.
Perfect.
Max, can we hear from you on this topic?
So I mean, like for this one specifically, right?
You're not Max, you're Gustav.
No. Okay, I think he's pointing at me. That's okay. Okay, so...
Take the microphone off him there. Are you wired up? I can't hear you.
Yes.
Can you hear me now?
Yeah.
Okay, all right, I'll try and speak a little more loudly. Look, I've been an investor in traditional financial services, and now I'm an investor in this thing we call fintech and fintech on a blockchain. And I don't see the world, certainly in my lifetime, as being as so binary as people make out. So I actually see that in the foreseeable future, mechanisms such as decentralized finance will only go mainstream if people that are doing really interesting things, such as the man to my right, for example, actually in some way start to intersect with more traditional financial institutions, but those that are more progressive and that have brave CEOs. So, you know, I chose to build this group of companies out of Singapore because Singapore, on the one hand, is a very, very strict operator, but on the other hand, it has a regulator that has an innovation arm. And we've just created a digitized Singapore dollar backed stablecoin using Zilliqa as a platform. Why did we do that? Because there's a massive remittance issue in Southeast Asia where Filipino domestic workers at the moment have to spend half of their earnings just to transfer money from let's say, Singapore back to the Philippines. So we can actually create remittance mechanisms where the price to play is tiny, which is how it should be. Okay. But I think, we need regulators, we need traditional financial services players to all interoperate with each other and these very, very cool new tech companies that are being created, if we're really going to go mainstream beyond my lifetime. That's
Gustav, are you interacting with the banks, and what if you are, what has their reaction been?
Yeah, we're interacting a lot with financial institutions. I mean, we have great relationships with a lot of different banks. We don't have any of the relationships that has manifested itself to being something we can talk about publicly yet, because it's of course like a very, very long scope. But exactly to Max's point here, is like it's the world is not binary, right? It's not zero, you go and you interact directly with the decentralized finance protocol, the smart contract itself, where you're self-custodian, you do anything, or it's you have a bank account, right? Like, in between, we see a lot of regulated entities, including entities in the UK. For example, I think Wirex is a beautiful example where you can have a debit card you can spend your crypto on. There's a lot of different things. Monolith, for example, is another one, also regulated. Wirex has the e-money license. We see Coinbase that, is licensed in all the jurisdictions they work in, who enables people in a safe way to interact with these systems. I also personally am a big believer in, for example, having like a trusted front end that could be, run by any form of like trusted company who will then allow you to basically receive these services. So for example, you could deposit your money to the DICE savings rate, and then they might take a cut. But I mean, if you want the security of using that platform, do that. You get a little bit less, but then you're secure. Or you can go directly into our smart contracts and interact directly with the smart contracts on your own. You'll get the full return. But if something goes wrong, you have no one to call. We really, in decentralized finance, it's really about building an infrastructure that other people can build products and services on top of it. Right now, we have 500 different companies that already is doing like something with a minimum of having DAI in it. So we have so many live integrations all over the world, and this also includes big publicly listed companies like Opera, for example, one of the biggest browsers in the world, all the way to like companies that operate under like financial regulations such as Coinbase and Wirex and so on.
Okay, thank you, Gustav. Alistair, I'd like you to have the last word. It's like you've had less time than anybody else. What's your answer to this
we
question?
come from the identity payment and verification side of thing, and our point is when we're dealing with the banks and new services and new technology, they want to know that that person is who they say they are, that that bank is who they say they are, and then they can interact with such services. Because at the end of the day, if everyone's hidden behind a private key with no identity associated to it, criminal activities can go on and beyond on a global scale. So what we're finding is that verified identity principles enables this new technology to start to work alongside existing services, which enable it to move to a mainstream environment, because you're starting to tick the boxes from the old world with the new world, because you want those services, the potential of the speed and the access that it gives on the new services, but you've got to do it in a way where the regulator and the banks and other people like that.
Are you saying that if the banks are convinced that your digital identity solution is credible and sound, that becomes a segue into the DeFi market? If they're comfortable with it there, they do.
Definitely. I mean, that's what we're seeing is predominantly our conversations with the banks, at first with their own products and the opportunities in that environment. But if they're happy to do it with their existing products, we, because of how we're structured, can actually work easier with this model than we can with the existing model. It's almost like we're having to do extra work to work with the old school, but we want to be working there. And then it's a very quick switch over to then move to the future potential of payments.
And Rebecca, Jonathan, if the regulators, the law was changed, would that help banks get more comfortable with this sector?
I mean, I think everybody should play well together. I think that's the beautiful thing about blockchain and the entire kind of community. So if you are a bank or you operate in any type of bank, you should be in this industry, whether it's on a venture sandbox level, messing with some of the things that these guys have created to see if it fits your model or what your future goals are, or it's dealing with the regulators to see if you can create a sandbox in which some of this stuff works. I mean, that's just the logical kind of conclusion of this.
Yeah, and I think even the AML stuff, the anti-money laundering, is going to be a huge issue, particularly as we want to kind of look across the globe and bring everything together. I think the identity, and if we can solve that, if we can enable that you can know that the person that's using your system is who they say are, and you've ticked that box, then I think it may be a kind of an easier pill for the regulators to swallow. But I think if we can't fix that, then that's going to be the issue.
But even when you're seeing like AML5 and IDAS working with those potentials, digital proofs and verifications, yes, they're still talking a little bit back to the old world, but we're starting to see a stepping stone into that environment that very quickly, because like one of the best levels of IDAS is that not only do you prove who you say you are, but you have a transaction proof, a reputation model afterwards. Absolutely. And with existing systems, that hasn't been the case, but having immutable proof on chain that you've done all these transactions without showing or revealing private information is actually better than that first ID that could or couldn't be fake, yeah? Because if you've been doing good payments along that time, and every time you do a payment, the merchant checks it, the payment gateway checks it, the bank checks it, the acquirer checks it, and the fraud checks that go with it, that's like 4 verifications that that person's good with that transaction. And then you don't really need to know who that person is, you just need to know they're doing good things, yeah?
Sadly, I think we're out of time, but Wasim, you want to tell us whether the banks are big buyers of your digital safekeeping solution. I was about to use the word custody, but luckily I avoided that.
Well, I was going to say, I mean, for traditional centralized financial institutions have shown us that they're actually not to be trusted, and the path to trust comes from evolving into DeFi solutions, whether they're internally in those institutions or whether that's partnering with the DeFi economy that's burgeoning right now. So
Okay.
I'm going to leave you with that.
Thank you, Wasim. Thank you to our panel. We better stop there.